Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I thought I'd take another look at real estate investment trusts or REITs to see if there's any value investing potential with these particular investment entities. As you guys know, real estate investment trusts are essentially ETFs of real estate. Each of these particular stocks has an underlying portfolio of real estate. Each of these has a little bit different composition of real estate, so you can get into a number of different arenas within regards to real estate. But they are essentially required by law to give back to the investor a proportion of its net earnings, and typically it's 90% or greater. So they're very good income vehicles, and a lot of these pay off monthly as well. One caveat is that these are affected by increasing interest rates in the current environment right now of increasing increasing interest rates. These have been trending down a bit, so I thought there may be a play for some value investing with regards to these. I have currently 4 different REITs in my portfolio. The first one here, APLE, second one, FRT, third, O, and the fourth, STAG. So 4 different real estate investment trusts that have a little bit different underlying composition of real estate. STAG here, STAG, is industrial. O is more mixed commercial and residential. FRT is more commercial, and APLE is in high-end hospitality, sort of Marriott and similar type of properties. So having said all that, let's kind of jump into my portfolio and kind of analyze each of these 4 different stocks here. APLE, again, owns a lot of properties that have high-end hotels like Marriott, for example. It's a relatively new real estate investment trust. You can see here starting in 2015 or so, and since that time it's kind of been up and down quite dramatically here. Currently in a downtrend. Over the last 3 months, you can see it's pulled back 9.11%, 1 month 3.64%, 1 week 1.51%. If we go down to its dividend, it's got a great dividend yield, 6.006%. Again, it's a relatively new real estate investment trust, so the sustainability and the reliability of this dividend is not able to really be commented on. But since it's in sort of high-end hospitality properties, I don't really think this is going to be affected over the next few years. I could be wrong about that, so not quite sure how to comment on this stock. I think it might be a good value play. Again, it's down a bit here over the last 5 years, or at least over the last year or so. It's only up 2.62%, as the markets have been up much higher than that, 9 to 11%. So this may be a good value play. Again, a little bit newer real estate investment trust with regards to the sustainability and reliability of its dividend, but I think this is a contender for a good value bet. The second stock here, a much more established real estate investment trust, FRT, one of the better known real estate investment trusts. You can see this has been trending down quite considerably. Over the last 5 years, you can see it's only up 46.97%, but a lot of that's because it's been trending back here quite considerably. Here you can see it's been essentially on par with the S&P 500, but it's trended back over the last 1 year 19.21%. This is a dividend aristocrat, meaning it's been increasing its dividend over the last 25 years. So it's got a long track record of sustainable dividends, increasing dividends. The current dividend yield is 2.702%. And you can see with its earning, it's been doing a lot better than what's been expected. But despite all of that being, a dividend aristocrat, increasing its dividend, a sustainable dividend, beating its earnings, it's still been trending down quite considerably. And again, the caveat would be real estate investment trusts in the environment of increasing interest rates. But the long track record, the sustainable dividend, I think this would be a good value play at the moment. Unfortunately, this is one of the first stocks that I bought on Robinhood, so I bought it back here when it was more in the $150 range. So I've lost quite a bit of money, 63.31, 11.4%. But I think this would be a good value investment moving forward. Again, a lot of these would be for the long-term buy and hold strategy. These may continue to trend down here over the next 3 to 6 months, maybe longer, but I think long-term this would be a great time to jump into these stocks. Again, it's hard to predict the nadir or when these stocks will stop from trending down and start trending back up. But with the good dividend here, the sustainable dividend, along with APLE here as well. I didn't comment on its earnings as well, but it's been beating its expected earnings over the last few quarters. So I think these are good value investments. Oh, here another a great dividend stock. This is, I believe what's called a dividend achiever. It's had 24 years of sustainable and increasing dividends. Hasn't quite made the 25-year mark, which is considered for dividend aristocrats, but it's a dividend achiever. Over the last 5 years here, you can see it's up 77%, but if we disregard this recent downturn here, it was up 123%, which would beat the S&P 500. Over the last year here, though, you can see it's also been down 12.14%, 3 months down 10%, month 12.6%. This has got a great dividend yield, 4.18, and again, like I just commented on, dividend achiever, a sustainable, increasing dividend over the last 24 years, and again, for earnings, it's beat its expected earnings over the last couple of quarters here by quite a large margin. So again, I think this may be a good value investment stock. Again, taking into consideration the current environment we're in with increasing interest rates. But again, a lot of these more established REITs, FRITO, don't rely on a lot of borrowed capital. So not quite sure why these have been trending down so considerably. Again, I would solicit opinions on the perspective with regards to its overall price. And the last stock here, STAG, this is an industrial REIT. Again, over the last 5 years, you can see this has done very well, very, very well. But again, up and down, currently in the uptrend. Over the last year, 30%. Last 3 months, 11.07%. But over the last 1 month, it's only up 0.9%. 1 week, it's up 1.44%. So this one hasn't actually trended down that much. I'm not sure if this would be a great value investment at the moment. Great dividend yield, 5.834%. So really not a lot to say with regards to value investment. This has been trending up here a bit, and I think that has to do a lot with a lot of the tax reform that's anticipated for industrials and for business overall. But definitely O, FRT, and APLE here may represent some good value opportunities. So let me know what you guys think about real estate investment trusts currently. Solicit opinions with regards to the impact of the raising in interest rates, the environment we're in, with anticipated 2 more raises this next fiscal year here. But I like real estate investment trusts. I like the opportunity to get monthly dividends for a number of these, including APLE and O. FRT is a quarterly dividend stock. But again, APLE, a recent dividend stock, but it's in high-end hospitality properties. FRT, dividend aristocrat. O, dividend achiever. So 3, if not 4, possibly good value investments right now. Again, let me know what you guys think about 4 of these real estate investment trusts. And not to make this video too long, I'll kind of end it here. As always, if you enjoy my videos, feel free to like, share, and subscribe. Hope you guys have been learning, following along with these videos. Again, if you guys have any good video ideas, let me know. And until next video, I'll see you then.